The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Thursday, the 18th of September, day after the Fed speak, and the market liked it, but it wasn't as exuberant as you thought it would be. And then this morning, look at this, we make this little double top in the E-mini. This is the December contract, double top at 67.19.75. Pulls back and then really rips to the downside, takes out the left side low that was there at 2 o'clock this morning, goes right under the 200-period moving average, whoosh, all the way down. So this 10-minute chart is in a gray leg A because the MACD and stochastic, nothing's turned positive yet. But look at the 5-minute chart. The 5-minute chart is already in leg B. It's above the 200-period moving average of 6,092. That's now, at least very near term, that is at least a tremendous support. I just want to do something right now. I'm going to go flat just because I'm busy in the show. So look at this. The stochastic has still got a long way to go at 58%. The MACD's crossed positive. The 9-period moving average hasn't crossed positive yet. The 200-period moving average is flattening out. So there's a little bit of work to go. It'll probably take 67.10 or 8 to really start to get to the area that we can talk about where the 9-period moving average crosses over the 14 and the 14 crosses over the 200. That'll be very positive. I haven't got there yet. But the 1-minute chart went right to the 200-period moving average of 65.97. Hasn't stalled. And it's holding up there very nicely, but we'll watch this closely. The stochastic's fabulous at 96%. Just wanted to go through that because I had promised, as a number of people said, as you've been talking about these different waveforms and the Chapman wave methodology, and as you've done this in real time, it's fascinating, and we'd like to learn a little bit more. Tomorrow's really technical Friday. Today's just plain old Thursday. And in the meantime, back at the ranch, what I am looking at here is that's very nice action continuing. So let me get out of this because this is what I want you to do. So in the Chapman wave methodology, I corrected this on my daily chart that I show subscribers every single day to show that we did an inside track repellent zone. We went right to the line yesterday with an inverted Chapman wave green Roman candle. We were waiting for that leg D. I said there's an alternate count. I don't think the alternate count's viable right now, but I am going to show you how it works. And that says that this low that was made here at 44,579, that would be in play, but you got so many 9-period moving average, 14-period moving average. You've got the 20-period moving average. You've got a rising wedge formation. I just can't go there right now. And wow, we got that leg D. And now we've done, and I said to subscribers this morning that if the Dow is able to be in this area for about 40 to 60 minutes, that is above 46,000. What did I say it was? I think I said this. 46,100, there's a real good chance we could tag the high of yesterday. All right, this is what I show every day for subscribers. This is the one panel, the same panel, except this time I've got Chapman wave automated resistance levels, look, all the way to 46,303, is that it? And then 46,420. But what we've got is the 9-period moving average, the 14-period moving average, the 200-period moving average, the MACD, which is positive, the stochastic, which is still only at 77%, got a way to go, and you've got the on-balance volume, which is a little bit overbought. And then the 120-minute chart made that peak E, but all of the technicals very strong. So I show this little panel. Let me just give it to you right now, right here. So this is what I do every single day for my subscribers. Very detailed account. Oops, that wasn't it. This is it. Of what we're looking at right here and you just one paragraph, you can read it. It says IWM almost tagged an all-time high. And I just go through that very careful, what to look for if after 1:30 the Dow can hold 120 points or more all the way to the close. That would be after 1:30 it'll be very positive. It can do that all the way through to the close. All right, let's get back to our story. And we want to look at, here we go. We want to look at the different indices. So we've got the Dow. Was it an all-time high yesterday? Trying to get there today. The SPX.X, that's the S&P cash, is at an all-time high. There it is. Is this an F? I'm calling this an F for now. It might have recycled because I've never. This is one of the few times I can actually say I don't recall in all my 250,000 or more, it's probably 500,000 charts that I've notated over the last 50 years. I just can't remember seeing something quite like this, where buying pressure just keeps coming in no matter what happens, and you barely get a pullback. Look at this weekly chart of the S&P. There's nothing here. It's just making higher highs and higher lows. Fabulous action. And the weekly charts, and as I said on Wednesday morning, I said on Tuesday, I said, everything about the charts is extremely positive. There's nothing here that you can complain about. It'll have to be bad news, and the bad news has to permeate the market, so there's a sharp sell-off based on news. So here we've got a leg E in the QQQ at 6.5, up 658 at 696.69, all-time high. Let me just type this in. Now, this is the amazing thing that we've seen over and over again. Remember, what's the rule in the Chapman wave? If within 3 bars, after a D goes to a higher high, think alternate count. E, in your mind, you think /A. You don't have to put it in. You just have to think that that is so powerful, that can be so powerful, that you've got to notate it. I'm doing a lot of talking. There you go. So here it is. Let me just grab it. And I put it. You don't have to use it. You just want it there. It's just like a little sign on the way that says yes or whatever it is. All right. And leg C's. Only a leg C in the weekly chart. Isn't that amazing? IWM. Let's see where the IWM is right now. Has it gone to 244? No, it hasn't. 244.28. Now, let me just show you this. 244.28. This is a leg C today. Still, it hasn't made a peak C because it hasn't closed under 244.28. But it looks like it wants to do that at 243.11. It's been the laggard. And you remember I drew in this Chapman wave methodology of using a plumb line. Sometimes it goes to the exact low of the number of bars on the left to the number of bars on the right. Sometimes you have to use a different type of here we go, candle. And most importantly, I have to today in the weekly chart this week to get to 244.98. Will it do it? I don't know. Look at the Chapman wave inside wedge dashed green resistance line. This is called the target resistance line. Very nice action. MACD, everything's very good. Let's just go, as we go to the break, let's go to the SMH. This is the SMHs. Oh, what a move. Up 10.82 at 316.06. That is amazing. That was a phantom peak. I said, no, we're going to use it now as a regular C, but I'm going to put it there, keep it there. And here it is in leg D in the daily chart, leg D in the weekly chart. Unbelievable. I'll be back. Dow's about 180.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Writing down a couple of questions here, actually quite a few questions here, but I know I forgot one. Oh, I did. Okay, good. All right, here we go. So the Dow is up 205. The S&P is up 46. Very nice action. This is the leg C in the 1-minute chart now. I got out just a tad ago, but I can't believe how busy I've been all morning. And this is still a leg A. And now let me just draw this here. I've got a lot to do, but this is not Technical Friday, but really there's a lot going on. So look at this. This is what I would normally draw. This is Chapman Wave falling axe formation, and it suggests that that will be the resistance level right there. So with that said, let me just correct it. I always like to have these exact. There's an exactitude to these that I like, and it's right there now. So this is leg A, just a single leg A to the upside. Really good. Oh, I can see that there's a lot of action going on. I can see trade stations a little bit slow. It's very unusual, but I'm watching this very closely. That says, in the 10-minute E-mini chart, if you break above that declining trend line in the falling axe, look, it looks like an axe with a handle and the blade, open blade, like an expanding triangle. If you break above that, then you start looking at each higher high. So that takes the 67.12.50 December contract, next level. Then the next one will be 67.17. And then you would get to the high in the 67.19s. I'll go one step at a time. It's very short term. It's getting a little bit overbought, which is fine. It's only in leg B in the weekly chart, in the 5-minute chart. Remember, I like to think of these as daily, weekly, monthly, or 1 minute, 5 minute, 10 minute. And so far, very good action. I want to see, I'm going to use this as a phantom peak right here, because I want to do this live just to demonstrate how this works. 0725, 0775. That's it. So just for the moment, I'm going to make this pink or red, making it pink, just to say it's a phantom peak. It's had parallel highs I can use it if I want. And that just says right here, be a little careful if you're in a position, maybe take one off, whatever it is, just take a little bit off as soon as it makes a peak. And you're in leg D. On balance volumes very overbought. Stochastic's fabulous at 96%. MACD is flattening out but still positive. And the 5-minute chart, everything here is very, very positive. So I'm saying this is the way I'd be looking at it. Now let's go back to what we were looking at. Question came in: could I look at the Bitcoin? So Bitcoin right now, this is the Bitcoin futures. Yes, it finally got to the left side high in leg D, but it's kind of struggling. You remember I spoke to you about this I would say, almost a month ago, and I said, I think we're getting to some topping area for the Bitcoin. I don't think it's a major sell signal. I just think we're not going to even change our position, but I do think we'll be looking to buy when it's done, but I think it's going to be choppy for a while in the lower range, and that's what we've seen. What has been much better is Ethereum. So Ethereum today is back in the middle of the rectangle. It's suggesting that it wants to climb towards the 40, up to about the 46 level. That'll be a leg D, unless this is an A, B, yeah, unless it has an inside buy signal. But right now I'm just treating it as a very nice cup formation that is pointing towards the upper side, and it's slightly stronger than Bitcoin. Okay, and that's this peak C in the weekly chart, and therefore it should go to a D, because we've always seen that Chapman wave methodology takes you to at least a D, and that's what you should get. So that would be above 45.79, 45.80 becomes leg D, and then the weekly chart leads us to the monthly chart, but that really is hard to use because that's an IPO. So this is just one part of the whole thing, because you really have to look at it as if it was Bitcoin. And just as we have IBIT, the iShares, which has a shorter time lapse than the Bitcoin, this is already at a peak E, whereas our IBIT started in the handle part, and therefore we've only just got to a D. And it's very different. We'll be along, we can see from there. All right, that was the question. The next, Galaxy, GLXY. So Galaxy is Galaxy Global Crypto. So this has gone to leg D. Remember we were talking about this? I said it should go to a D in the Chapman wave methodology. Yesterday just started, or maybe it was today. Here it is, weekly chart, leg D. Now, you said if it's going to all-time highs in this particular contract, can I do a more in-depth one? I'll probably do that tomorrow, but I'm going to do just an abbreviated one right now, because you've got this huge single leg A to the upside in the daily chart. Now, these daily charts, in the shorter time frame, you can get a single leg, I call it the Eiffel Tower, single leg straight up to a high in one swoop. And then you've got to monitor it, because it could look like the Eiffel Tower, like a pyramid going straight up and then straight down, one narrow pyramid. But in this case, there are so many support levels. The stochastics are 97%. The MACD is expanding. The on-balance volume is really good. The 9 is over the 14. The price is way over the 9, and it's only a leg A. But I have to consider that there's an alternate count, because this is the way it works in the Chapman wave methodology. That was your starting point at 17.40. On the 23rd of June, you did go to a D. You did have two dreaded H patterns. One turned into a lowercase m, and it went to a lower low. But I still have to consider that it didn't take out that low. There is just the slightest chance it happens that there's a continuation pattern. I'm not doing anything yet. I think I can be quite, at least a little bit assured that there are enough support levels going down to 30.20 to 28.50 that this will rebound and go to a higher high. So that let's just take it at the moment that this is extremely positive. It's got the lopsided rectangle formation, and it's broken to a higher high. Now the question came in, where would you project to? Well, there are so many different ways you can do it, but I love if there is price action on the left side. This thing was once at 600 and something or other. It went even higher than that. It was an IPO back in May of 2006, and it opened at 700. It opened at 676.11, and wouldn't you believe it that it made an all-time high of 700.08. What a pity that 8 crept in there. 700.08. So let me just type that in, 700.08. So where's the upside target? Well, upside targets are always places you've never been to before, but you've always got the stuff on the left that is a guide. I'm not even going there. Let's just go one step at a time. So where are we? What we're looking at is if there is an instant restart that took us to a D right there, and this is a brand new peak, E, F, G, but not a continuation pattern, but a brand new A, B, and we're in leg C, then all I can say is I'm expecting at least a D. But with these, you see how candles start off small, and then when they get really big, what happens is they are starting to get to levels where in their own vernacular, they're going to get very overbought. They aren't getting there yet, but they're on their way. So I'm saying it's at 33.94 as it stands right now. My suspicion is this is a leg C. When there's a lower high, to make a peak, you will still get a D. As it stands right now, on a shorter term basis, more intermediate term, but I'm saying shorter term, just looking out over the year, I can see 38 to 40.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
There it is. I just kept this going because what we've got is still that leg A. Remember, we broke that falling formation, broke above it, so we go to each higher high. And the next one was the one that I said was at 67.17, and right now we're trading at 67.15. And this is the 5-minute chart, leg B. But this is the one that we were looking at. Remember I said, just to be safe, I like to have parallel highs where I've got a little ictus in the technicals that says, yeah, that could have been a peak, and I use it, and I might just take a little bit off, or just I raise the stop. I'm just being a little careful because there should still be a D. Well, lo and behold, there is the D. And now what we've got is the C, the proper C. It should go back to blue, but I like to just keep it as pink, saying, hey, you used this before, you might have to use it again. So now we've got an instant restart. E/A. The on-balance volume now is really overbought. That doesn't matter. The stochastic's flat at 89%. That's great. MACD's flat, not actually expanding, but flat. And it says, okay, just in this particular range, because now we're at we've passed the 10:20 time in the morning. Now you've got a new bunch of players. So that's very important. Let's just keep it and say, look at this. The 9-period and the 10-minute chart finally went positive. The 5-minute chart has been positive for a while. And the wonderful 1-minute chart gave a lovely turnaround and a good clue to go along right when it turned green at 9:59 this morning. So that's really nice action. All right. So with that said, let's just move away from this and go to a couple of questions that came in that I think are really pertinent. So Galaxy, I didn't finish, but did you write anything in? I'm not sure. 420 points. Okay, 50 more points. Okay, we'll be done. 600. Okay, something. Okay. Yes. So in this particular instance, I'm just going to do some questions here. So I just wanted to show you that I have a move that says that D should come in, and with the candles expanding like this, it says that the next candle should be at least a half of this whole candle. Well, the candle's still the month. It hasn't even close to being finished. So I can't even call it. I can just say use it as a clue. And that says it takes me towards the 38 level, going out into maybe October, November, 38 to 42. That's not my final destination for the Galaxy. Global Crypto, GLXY, trading up 74 cents at 33.77. But I'm just suggesting you that it has the potential to go there. The most important thing is throughout the next 6 weeks, it's at 33, but 25 to 21. Very important support. If that gets taken out, I have to change time sequence and a whole bunch of things. But at this point, I don't have to. Okay, now that's Galaxy. The next one was Oklo. Oklo, this is a nuclear. Oklo Inc., clean energy, also nuclear startup. Whopping leg C in the monthly chart. Whopping leg C in the weekly chart. What do we have in the day? Sometimes they coincide. This is peak A. Just as this is your starting point. Remember, I can't be wrong. This is the low. If I was here, I could be long because it could come back and retest, but it hasn't. So I can just look back and say, perfect. There's the low. There's the A. There's the B. There's the C. There's a huge D right there. And I always have to look for 1 penny because it looks like there might be a penny difference. And that is on the 15th of September, it went to 95.91, and on the 16th of September, it went to 95. Aha, you see, 95.90. So you tell me, did you see that? But I've done this so many hundreds and hundreds of thousands of times. I just, at some point, I know when my eyes, I don't know if I'll be able to do it, and that's when I'm really going to have to get this notated automatically. But look at that, that's an E. So this is acting very, very well. Stochastic's flat, fabulous at 98%. MACD still expanding. Retro strength is good, very good. in the daily and the weeklies are the same. So I like this, and I'm just going to say right now, 93 to the 9-period moving average of 88 is the next 3 weeks support level for UCLO. No, 2 weeks, I'm sorry. 2 weeks going into the end of September, I'll say. And the upside has, oh boy, these are hard, because the history is so weird. Look at this flat nothing. All I can say is that I would make some projections, and all I can do right now is the stocks that go to 90. Look, stocks that go to 96 very quickly go to 104. What's today's high is 101.98. Let it get to 104, then it'll pull back. Stocks that get to 100 from 96 to 104 take a little while, and then they get to 124. Well, that's 124 would be my target for UCLO over the next 2 months. All right? And as I say, key supports in that 90 to 88 area in the shorter term. So why do I say that? Just let me go down. Let's see where it is. I'm not even sure where it is. Yes, Robinhood, not an all-time high. That was made 7 sessions ago, at 123.44. But remember, stocks that go to 96 very quickly go to 104, then pull back. And this one took no time at all, and then it went to 123.44, basically 124. I like it very much. It's acting very well. We are still long. We keep wanting to add, haven't added, but it's still there. And leg D in the weekly chart, and I do have a fib extension. This one to me was a coincidence with my expansion work, and that just says 129.60 call it 130. 130 is kind of the target that I would have over the, you just can't say, over the next hour? No. This is the target I would have over the next couple of weeks, all right? And the monthly chart breaking out to all-time highs. It looks to me this is not an F, but an alternate count, F/B. All right, we still have a little bit long from down there. All right, so that's said. Okay, now I want to go back, keep this live, just to show you the technique. It works in real time. So there's your E. Remember, the phantom C became a real C, and the D fell in place, the little tiny doji. Then it popped up. Now it's pulling back. Target hit, pulling back. And what are we looking at? We're looking at a potential peak B in the 5-minute chart, and still a leg A. Is this an Eiffel Tower straight up, straight down? I really don't think so. But when am I about to put the down arrow? If the 9-period moving average slips to pink, I'll go to the. All right, we'll wait to do it. I don't have to rush to do it. All right. And look, it's almost back to where I got out. And you got to have patience. That's it. Dow's up 277. S&P's up 50. Basil Chapman, Tiger Conditions Hour. I'll be right back. We've got a couple more questions, and I'll get to it in a moment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay. This is what I do. So Rigetti Computing, and I always get asked about this. I wanted this for subscribers, and I missed it, and I just wasn't prepared to play the big move to the upside because we had others that I was monitoring. I didn't know what the Fed was going to do, and now we've got this leg C in Rigetti. It's up 2.14 at 24.13. Beautiful move. I mean, just a week or so, it's tootling ago in the 18s, and here it is at the 24s. Leg E in the weekly could be an alternate count, but let's call it an E. Broke above that rectangle formation, but this is what I want you to show you. So in the monthly chart, look what happens. So in the Chapman wave, what I do is, I learned a long time ago, I've got, look, this is a peak B, 21.42 back in January. It comes tumbling down to the 6, 7 area. Then it walks the 9-period moving average. So then under it, there's a peak. Well, this peak becomes a gray A. Why is it gray? Because the major one is the B up there. Then right here, under 21.42, I still keep this as a gray B. The rule being that the moment it takes out the previous B, that picks up the next letter either in the sub count or in the major count. So this gray leg B immediately changes its color and goes to a blue C. Why? It just continues the pattern. There's just nothing to do. It just continues the pattern. And but under it, I had to show you that you hadn't made the leg C yet, but you were actually at a B. All right? Then overlapping B, boom, goes to a C. And here we are. So this is very powerful because it's just still, in the monthly chart, go to a leg D. All right, as that's standing right now, question, DDD. Our old favorite. We once had this, did really well, 3D Systems. Actually, we once, a very long time ago, back in 2007, 8, 9, 10, I don't know what it was, SYS something, also the 3D company. We had that, and that did really well. So okay, so this is this is what you want to see. So look, that's an A. No, this is a gray A. Still an A. Now it's a B, gray B. But the MACD's turned up. Stochastics at 49%. Okay, it's not good at all, but it's okay. And the on-balance volume's okay. The 9 is over the 14, and now it's tackling the 200 period moving. Yes, it could be head and shoulders. No. I like this. So put this, if you are, I wouldn't say risk averse, but if you are someone who likes the idea of, say, 3D systems, some technology, you followed for a long time, looking at this beautiful systematic higher highs and higher lows cup formation, then at 2.41, you could start a small position. I would still have a stop in it, maybe stop at about 2.10. It shouldn't get there if this is continuing to move higher. All right? So yes, I like it. Where's the target? Always the left side high is the target. And in this particular instance, it's 269 or what is it? 270. 270, the high of the 27th of August. But I'd prefer to say, just think of it as yet another rectangle. Look, there was a rectangle that was tackling that turned into a U-shaped pattern. Here's another rectangle. Just think of it as doing the job that's being done in a rectangle formation and in a cup formation, and you want to see the ellipse, the quoro, that's the quarter of a semicircle, continue to make that hull, the right side hull of the boat, right? And that's all you want to see. Hull. All right. So I hope that helps you. Yes, very good. Good eye. Next question came in. Oh, I'm sure I missed one here. I saw it. Oh, yes. BWXT. Pat, let me just have a look. I think we've looked at this before. BWXT. Just sounds familiar to me. I don't have it notated. Oh, this is beautiful. 171.05 up 267. There's the same cup formation, working very hard. Stochastics gone back to 77. It should be at 82%. Then I say, yes, I feel comfortable. Peak A, peak B, peak C. It should make a D at 183. But right now it's at 171. It's acting well. It's one of those longer term just buy and hold positions. You can see the way the 9-period moving average held. It hasn't even gone to the 14 since around about May. This is a very nice action. I'll do a little bit more tomorrow. BWXT. There's a lot going on that I just wanted to finish right now. So the question came in, is this a time to be thinking of shorts? Well, it's a little later when I play tennis. It'll be warm enough for that. But if you're talking about the actual 1-minute chart, it's gone all the way back to the 200-period exponential moving average, and that peak E got that down arrow, right? And you've got B in the 5-minute chart pulling back between the 9 and the 14-period movement support levels, and the A has come back. But as I see it, what's really important, how does this hold 66.93. That's a little bit down, almost 9 points below this. 66.93 is the 200-period moving average. Now, I would just look at this and say there's been a lot of buying pressure, and there's been a very emotional buying pressure, because if you're looking at I'll go to them in a minute, the home builders, you'll see some of them didn't do very well yesterday. So all I can say is that the short was, as we were turning over, and I was about to put the down arrow, and I said, took out the 9-period moving average. So from 67.10 down to 6700 or 6701. That was the ideal place. Now what you want is a failure pattern, that it doesn't rally into the 6706 area, but instead every pop sees a failure. But I'm actually looking at it and say, I think there's trying to be some support there, but whether or not we go to the high of 10:30 this morning, I don't know. I'll get back to that just before we wrap up for the day. But there's a question that's come in that I think is as important as, and what I want you to do is do you see this gap? I love to look at gaps and discuss them. You see this gap right here? Never got filled, almost, but never did. And now what you've done is you made a cup formation into the candle, the spike up candle, which held for 1, 2, 3, 4, 5, 6, 7 on the 8th day. After the gap, it took out the gap low. So this is just saying to me, a tremendous amount of energy has been exerted to the upside, and as a result, you have to see the curve continue, because if this slips to 166 or lower, it's at 170, let's say 171 right now. Then that pattern says rectangle pattern, watch out, it can go sideways for longer than your patience. So it has to, today's Thursday, today's low is 168, round number. It mustn't take out the 168 by tomorrow, and by Monday, it's got to be traveling and working its way into the 173s. Hope that helps you. Next question is, got the break. The gap on Nike, let's do that right now. NKE. Yeah, this is under the 200 period moving average. It's hit it for five days. I would say to you, the way it looks right now, Nike trading at 72.22. If it takes out the low of the 26.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
In this particular case, and this applies almost to Nike. So let's just do this right here. So this says there's a measured move from the left side to the right side based on this particular candle, doji candle, at 10:04 this morning on the E-mini, and that's around about 66.93. What happens is it goes up and it goes to the plumb line right there at that peak E-top. So I do that, and then I do a measured move, and I go click to the right side to say the number of bars on the right could equal the number of bars on the left. But I use a Chapman wave inside wedge target support line right there to say this is what I'm looking at right there. All right, so we'll see if that. We've got a few more minutes to see if this is going to work out. This is exactly the pattern that I would call it the Eiffel Tower. All right, straight up, straight down. More like a pyramid, but it has the same characteristic as an Eiffel Tower. So instead of a triangle, I'll just use my semicircle. That always seems to be visually more impactful. All right, so that's what I'd be looking at. So now let's go to Nike. And Nike is trading at NKE. There, yeah, look at this. So this is the arch formation, but it has the same connotation. That would be my midpoint. That would take me to maybe a Tuesday or so. But if Nike actually takes out not this low that was made yesterday of 71.61, but I would put it at 70.50. Then this gap right here on the 27th of June with a low of 69.69, that becomes resistance all of a sudden if it starts to go below that. But right now it doesn't look too good. It's more in a rectangle formation, but it's arching over. All right, as we're about to go out, let me just finish up by saying the day is young. Anything can happen. There isn't real certainty as to what happened yesterday with the Fed and coming into tomorrow, especially with the economic reports, the jobless, etc. So just be really careful. At this point, we've got a position so that we've